want to hear from the Indian ink. What's stopping you?
Finance Minister Nirmala Sitharaman threw down the gauntlet at an event recently. In a direct question to India Inc., she asked, despite supportive policies, why are Indian companies not investing in India? Here's what she said.
We will do everything to get industry coming and investing here. Give PLI. We've given PLI. I want to hear from the Indian ink. What's stopping you? When countries and industries abroad think this is the place to be in now at this time, FDIs are coming, FPIs are coming, it's all, the stock market is so confident, the Indian retail investor believes in them.
The Finance Minister's frustrations aren't unfounded. In fact, research by the Centre for Monitoring Indian Economy threw up a few interesting data points which relate to the disposal of profit by Indian companies. That's all in a column written by the MD and CEO of CMIE, Mahesh Vyas, on the website bqprime.com. But let's go through the key points. Number 1, Indian companies made supernormal profits in the last couple of financial years. CMIE looked at the financial statements of 3,299 non-financial companies, and that accounts for a very small percentage of the total number on their database that stands at over 25,000. But these 3,299 companies had net sales that was about 60% of the larger group. But at the same time, in the last financial year, these 3,299 companies had profits of 6.7 trillion rupees. That's more than what the larger group achieved in the last financial year. Number 2, this has to do with dividends. Now, it's been found by CMIE that in most cases when profits go up, dividends also go up. But that wasn't the case in the last couple of financial years. In fact, companies held back more of their net profit. So supernormal profits and more profits held back. In FY21, companies held back 48.6% of their net profit. That was the highest that was held back in 9 years. And in FY22, that number went up to 60%. And that was the highest in 11 years. Number 3, the next logical question, as Mahesh Vyas points out, is what did these companies do with the money that they held back? What they didn't do, in fact, is probably more telling. They did not invest in plant and machinery. In fact, net fixed assets that were created by these companies over FY21 and 22 grew by 2.3 and 2.1% respectively. And in fact, plant and machinery investments grew by only about 2.3% in FY21 and just about 1% in FY22. Instead, these companies invested in the equity and debt of other companies. In FY22, you saw equity investments by these companies rise by over 17%, and investments into debt instruments went up by over 28%. In fact, as a share of total investments, investments into financial assets stood at 21% in FY22. That's the highest they've ever been at any point since the 1990s. A few points to consider. A lot of these companies have deleveraged quite significantly over the course of the last couple of years. But more importantly, a lot of them will point out that their capacity utilization has been slack. And that explains why they haven't invested in plant and machinery so far. But the bottom line is, with volumes supportive and pricing in fact also supportive, a lot of these companies might have to sooner rather than later invest in building more capacity. Now, for a lot more in the space of analysis and, in fact, on this topic itself, you should tune in to bqprime.com. And in case you haven't yet, hit the like button and also share and subscribe. This is BQ Prime.